We didn't see very much, and Kriti was talking about this earlier, we didn't see very much response in euro-dollar as a result. What do you make of the fact that the euro was quite resilient?
Absolutely, Anna. It's interesting that Trump should mention 25% tariffs on European automobiles or just Europe as a whole, and the euro should just shrug it off. If he had announced this at the start of the year, the euro would have been pummeled. The reaction would have been very different. But with there being some or the other announcement on tariffs from the US almost on a daily basis in recent days, the markets have kind of grown inured to them. The markets are essentially treating tariffs as a looming threat and as a negotiating tool rather than as something definitive at this point in time. That means that the euro will move further and further away from parity as the markets fade the earlier strong dollar theme. And that is especially so because if you look at the tactical trade, Anna, the ECB meets next week, and it is likely that they will signal that they are turning cautious about future rate cuts. We've already heard from Schnabel, we've already heard from Nigel saying that, look, I mean, future rate cuts aren't guaranteed. The rates may not be as restrictive as they thought earlier, and that neutral rate estimates are more academic. So I think that there's a very good chance that the ECB is going to signal that future rate cuts aren't on autopilot, aren't guaranteed, and that is going to support the euro until such time as we get to know what the US situation on tariffs, the definitive situation on tariffs is, as opposed to every headline announcement coming every other day from the administration.
Then where else are we seeing this all showing up? It was interesting, I was reading your notes before the show. You're talking about swap spreads and what we're seeing there. Walk us through other areas of the market, maybe less explored areas of the market that we should be paying attention to.
Well, swap spreads is a key segment of the markets we should be watching. Why should we be watching that? Because swap spreads are a useful proxy for what is known as the convenience yield. What are swap spreads? Swap spreads measure the differential between swap rates and similar maturity government bonds and provide a dipstick of sentiment toward preference for owning government bonds. Swap spreads in the euro area have tumbled to record lows and are negative at this moment, meaning bond yields are higher than swap rates. Why is that happening? Because euro area governments are looking to raise a lot of money from the bond markets via fresh issuance. Before the pandemic, Guy, there wasn't a single year when the bond sales exceeded 1 trillion euros. However, since then, they've been raising in excess of 1.2 trillion euros every single year. And this year, because of the defense outlay, the additional defense outlay that the US is imposing on Europe, it means that they will be looking to raise in excess of 1.4 trillion. So that issuance means that we have gone from a global savings glut to a bond glut, which is why swap spreads have turned negative.